Listen up, the next 48 hours could define the rest of the year for investors, traders, and anyone with a stake in the economy. This isn't just another news cycle, this is a convergence of events that could send shockwaves through every corner of the market. We're entering one of the most critical 48-hour stretches this market has seen all year. The pressure is building, and the stakes have rarely been higher. Three powerful forces are about to collide, each with the potential to move markets on its own. First, the Federal Reserve's rate decision, which always has Wall Street holding its breath. Second, a housing market that's showing signs of strain, with buyers and sellers both on edge. And third, Micron Technology's high-stakes earnings report, a bellwether for the entire tech sector. Micron's results will be watched not just by tech investors, but by anyone tracking the future of AI, chips, and innovation. The company's performance could ripple out to every portfolio. Each of these events could move markets on its own, but together, they're a volatile cocktail. The outcome is unpredictable and the reaction could be swift and dramatic. This isn't just about one headline, it's about how these events interact, overlap, and amplify each other. The market is a complex web, and right now, every thread is vibrating. The Fed's move impacts borrowing costs, which hit housing hard. A single rate hike or pause can change the entire landscape for homebuyers, sellers, and builders. Housing, in turn, signals consumer confidence. When people feel secure buying homes, it's a sign the economy is healthy. And tech companies like Micron depend on that confidence to drive demand for their products. And Micron's report? It's the litmus test for the entire AI-fueled rally. If Micron stumbles, it could cast doubt on the tech sector's explosive growth, and on the future of AI itself. Over the next 2 days we'll see a collision of monetary policy, economic reality, and corporate performance. The outcome will set the tone for months to come. The stakes? The bull market's momentum, the confidence of investors, and the direction of the entire economy hang in the balance. The direction of interest rates, the health of the housing market, and the willingness of consumers to spend, all are on the line. This is not the time to be passive. You need to be informed and ready. Every headline, every data point, every executive comment could shift the narrative. We'll get crucial signals from the Fed, fresh housing data, and Micron's C-suite. Each will offer clues about where we're headed next. These signals will tell us whether to stay bullish, double down, or brace for impact and play defense. The market is about to speak. Are you listening? Because, in the next 48 hours, fortunes could be made or lost. Pay attention, because everything is on the line. The decisions you make now could echo for months. Let's break down what you need to watch, so you're ready to act when the market makes its move. The real heavyweight fight isn't in Congress, or even on the campaign trail. It's happening behind the scenes in the world of money and power, where decisions ripple through every corner of the economy. The true showdown is between President Trump and Federal Reserve Chair Jerome Powell, a clash that could shape your financial future. Trump is pushing hard for interest rate cuts, hoping to counteract the impact of his tariffs and keep the economy booming as he heads into an election year. He wants to see more jobs, higher growth, and a stock market that keeps breaking records. He's not shy about putting public pressure on Powell, even going so far as to question his leadership and hint at replacing him if he doesn't get his way. But markets hate this kind of drama. Investors crave predictability and calm, not political battles that threaten to upend the rules of the game. Powell, meanwhile, sees the tariffs as a force that could drive up prices for everyone. He's holding rates steady, determined to keep inflation in check, even if it means risking slower growth. This public feud injects massive uncertainty into the market, making it harder for businesses and families to plan for the future. If the Fed gives in and cuts rates while inflation is still high, it risks losing its hard-won credibility, something that could haunt the economy for years. But if Powell stands firm and the economy slows, critics will be quick to blame the Fed for any pain on Main Street. Every headline, every tweet, every offhand comment from Washington or Wall Street sends shockwaves through the markets, making investors even more jittery. Investors are caught in the crossfire, desperately trying to read the Fed's next move and adjust their portfolios before the next big swing. The next 48 hours are crucial. Fed officials will speak, and every word, every pause, will be dissected by analysts searching for clues about what comes next. This battle over monetary policy isn't just about interest rates, it will set the tone for the economy, the markets, and your financial well-being for months to come. So pay attention, what happens next could affect your savings, your investments, and your future. The stakes couldn't be higher. In this battle for your money, every decision matters. Let's talk about Powell's warning, a warning that's sending ripples through Wall Street and Main Street alike. He's talking about stagflation. If you're not familiar, stagflation is the economic nightmare scenario, where the economy slows to a crawl, but prices keep climbing. It's a rare and toxic mix that haunted the US back in the 1970s with long lines at gas stations and empty shelves in stores. The Fed's usual playbook doesn't work here. If they cut rates to boost growth, inflation can spiral out of control. But if they raise rates to fight inflation, they risk pushing the economy into a deeper recession. It's a lose-lose situation, and policymakers are left walking a tightrope. Powell has specifically called out tariffs as a major stagflationary force. Tariffs slow economic growth by making imports more expensive, while at the same time, they push up prices for consumers and businesses. Companies are squeezed from both sides, facing higher costs for materials and goods and forced to make tough choices. They can either absorb the losses, which hurts profits, or pass those costs on to consumers, which fuels inflation even more. The result? Higher prices at the checkout and shrinking profit margins for businesses. It's a double whammy that can send shockwaves through the stock market and the broader economy. We're already seeing early warning signs: rising treasury yields, shaky corporate earnings, and growing anxiety among investors and executives. When inflation fears and growth fears rise together, it's a major red flag. Markets become volatile, and uncertainty spreads fast. Stagflation doesn't just hit Wall Street, it hits everyone. Families feel the pinch with higher bills, paychecks that don't stretch as far, and the looming threat of job cuts. The Federal Reserve is on high alert, holding emergency meetings and watching the data closely. Financial advisors are fielding anxious calls from clients, and everyday people are glued to the news hoping for reassurance. This isn't just a theoretical risk anymore. The first signs are starting to show up in the economic data, negative trends that can't be ignored. If stagflation really takes hold, the market could be in for a wild, unpredictable ride, one that could shake up portfolios and retirement plans. So, keep a close eye on the economic data. Watch for signs of slowing growth and stubborn inflation. They're the signals that matter most right now. The boogeyman is real, and it's lurking just out of sight. Stay vigilant because the next chapter for the economy could be written by stagflation. The economic squeeze is hitting housing and tech hardest. In housing, high mortgage rates and new tariffs are making homes more expensive to buy and build. Builders face higher costs, buyers face higher prices, and the dream of homeownership is slipping away for many. In tech, global supply chains mean tariffs drive up costs for companies like Micron. Higher rates also hurt tech stocks, whose future profits look less valuable. If consumers are squeezed, they'll cut back on gadgets and subscriptions. Both sectors are feeling the pain, rising costs and falling demand. The pressure is building, and the fallout could spread. Watch these sectors. They're the canaries in the coal mine. If they crack, the rest of the market could follow. The vice is tightening. Now, the main event, Micron's earnings report. This isn't just about one company, it's a proxy for the entire AI sector and the market's mood. Micron makes the memory chips powering the AI boom. If they crush expectations, it validates the AI rally and could spark a market surge. If they miss, or warn of slowing demand, it could deflate the entire tech sector. The stakes are huge. A good report could fuel a rally, a bad one could trigger a correction. Investors will hang on every word, especially the outlook. This is the market's reality check. Watch Micron. It's the bellwether for what comes next. The whole market is holding its breath. While the Trump-Powell drama grabs headlines, smart money is listening for the Waller whisper. Fed Governor Christopher Waller's upcoming speech could reveal the Fed's true intentions. Waller is blunt and influential. His words move markets. The key? Any hint that the neutral rate or R-star is higher than expected. If Waller signals rates need to stay high, it's a bombshell. Forget quick rate cuts. This would reset market expectations and could send stocks tumbling. Don't just skim the headlines. Look for subtle shifts in his language. A hawkish Waller could be the catalyst for a major market move. The Waller whisper could become a roar. This is the inside game that matters most right now. Listen closely. Now you see the setup. political pressure, stagflation fears, housing and tech stress, a crucial earnings report, and a hidden Fed signal. The market's foundation is fragile. A bad outcome in any area could trigger a domino effect. Imagine, Waller sounds hawkish, bond yields spike, housing and tech get slammed, then Micron disappoints. Suddenly, a flash crash is on the table. Political chaos only adds to the risk, shaking investor confidence. The market's been running hot on AI hopes and rate cut dreams, but now faces its toughest test. The next 48 hours will stress this foundation like never before. This is a make-or-break moment. If the wrong pieces fall, the bull market could snap. Stay alert. This is high stakes, high volatility territory. Everything could tip over fast. So, what should you do? Don't panic, have a plan. First, watch Waller's speech for any mention of patience or a higher neutral rate. Those are red flags. Second, track the 10-year Treasury yield. If it spikes, markets are bracing for higher rates. Third, focus on Micron's earnings, and crucially, their guidance and CEO commentary. Strong demand, good sign. Cautious language, big warning. The after-hours stock reaction will tell you how investors feel. Finally, put the pieces together: hawkish Fed plus weak Micron. Get defensive, dovish Fed and strong Micron. That's a green light for tech. Don't react to one headline. See the whole picture. This is a time for strategy, not emotion. Stay nimble, stay informed. Don't get caught flat-footed. When the dust settles, the market could look very different. If we get a hawkish Fed and weak Micron, expect volatility. Don't panic sell, but trim risk and build a shopping list for bargains. If the Fed is dovish and Micron crushes it, the market could surge. Don't chase, but add to winners on dips. Most likely, we'll get a mixed bag. Range-bound volatile markets where stock picking matters most. Focus on companies with strong balance sheets and real earnings. These 48 hours are a stress test. Watch, learn, and adjust. Don't let noise force bad decisions. Whether the market soars or stumbles, there will be opportunity. Winners will be those who stay disciplined and ready to act. This is a pivotal moment. Know what you own, and be prepared. The aftermath will reveal true market leadership. Stay sharp, stay informed. Now, go do your homework.